Have you bought your dream home before selling your current home using a bridge loan? Are you now wondering how you can use that leftover cash from the sale towards your new home loan after you already closed?
Yeah, this is a question we get a lot. Like, what if I have extra money when I sell my existing house and I want to use it to put down on my new home after I close? This is a dilemma, right? Because you've already closed on the new house and you got a bridge loan of probably 75 to 80% of the existing value of your old home. So what about that extra 20% equity that was left in the house? This is a great question. So most likely out of that 20%, you had to pay the realtors and closing fees. However, you probably do have some money left over.
So can you use this money towards your new house? And is there a way to drop your payments by putting this money down against the current loan?
Well, the answer is yes. There is this really cool loan option and it's called a recast.
Oh, most people have never heard of that. So what is a recast?
Well, a recast is when you make a large principal payment on your mortgage and you ask the lender to recast or re-amortize the loan based on the new lower loan amount. So for example, if your previous home sold for $650 and you took out a bridge loan for $400 to use as the down payment on your new home, and then once you sell, you get an additional $250,000 less your fees and closing costs to sell the house. So let's say you have an additional $200,000 that you wanted to put down to lower your house payment. You would contact your lender and request a recast, and then you would go through the recast process and they would re-amortize your loan.
So why can't you just put down the 200 on the loan after you sell? Doesn't that the same thing?
Well, actually, no. If you just apply the 200 to the principal balance, you have lowered your principal balance and you're going to save interest in the long term. However, just applying money to the principal balance is not going to lower your payment. Your payment's fixed. It's never going to change.
Oh, interesting. I bet a lot of people haven't thought about that.
So if you ask for a recast and go through the recast process, you can apply the $200,000 down, have the lender re-amortize your loan based on the new smaller loan balance, and they actually give you a new smaller payment.
That's great. Good to know. Are there any rules that we should be aware of?
Well, there are some rules. So first of all, it has to be a conventional loan. You cannot do a recast on an FHA or a VA loan. They don't allow recast. So next, your interest rate isn't going to change. So the only thing that changes is your loan balance, and they re-amortize your loan based on your large down payment. Okay, now there is a fee. Sometimes it's anywhere between $250 to $500. And the loan balance must decrease by at least $20,000. And ask your lender, everybody usually gets a one-time recast in their loan.
Sounds like a recast is a great idea after doing a bridge, because you can lower your payments after you have already closed on your loan.
Right, it's a win-win for everybody, and we love those.
I love lower payments.
Me too. So make sure you watch all of our series on our bridge home loans. Follow us on social media, like this video, and if you have any questions, reach out or drop us a comment. I am Stacy.
And I'm Dennis.
And we are Slam Dunk Home Loans.